Let me highlight briefly the state of the market as we saw it in 2011. Activities on the Nigerian capital market began on a positive note in 2011. This was largely, as we have been told, in response to the series of transformative initiatives undertaken by the S.E.C. to stabilize and nurture the market, as well as some of the important actions of the government, including the establishment of AMCON. And I would say in part because of a supportive operating environment. You'll recall that on the first day of trading in 2011, market cap opened at 7.92 trillion naira, and the all-share index was at 24,770.52. This was, of course, a significant improvement over 2009, which, as you'll recall, on the heels of the global financial meltdown, opened at 4.9 trillion naira in terms of market capitalization and an all-share index of 20,827.20. However, the gains which characterized the first half of 2011 were reversed in the second half of the year. A number of factors accounted for this development. You know that the growth was characterized by the end of the year as essentially fragile. You'll remember the downgrade of the US credit rating. You'll remember the Eurozone debt crisis. You'll also remember that as a result of the efforts of the financial sector regulators to resolve decisively the banking crisis, specifically ensuring that no depositor lost even a naira, essentially 3 of the banks had to be nationalized. We also saw through the year in 2011 the contagion effects of political crisis in other countries. Earlier in the year, the initial impasse in Cote d'Ivoire, which was subsequently resolved, and the Arab Spring, which characterized a number of the Middle East and North African countries. Therefore, by the end of 2011, the market capitalization stood at 6.5 trillion naira, and the all-share index stood at 20,730.63, representing a 16% decline to the figures that we had in 2010. So essentially, taking back all the gains that we had made in 2010, less 3%, of course. That notwithstanding, we had a total of 16 new issues, 6 rights issues, 9 private placements by public companies, 1 preference share issue, totaling about 142 billion naira. And this represented an increase of 18% in terms of value and 4 additional issues compared to 2010. Also important to note is that 2011 witnessed an increased inflow of foreign portfolio investment to the tune of 478 billion naira, as against 382 billion naira in 2010. I believe that the reason we have seen such significant foreign interest of over 60%. Some people have said at some point in the year it was almost 80%, was really due to an appreciation by foreign investors of the value that the equities market provides to investors. The S.E.C. has implemented a number of initiatives to strengthen the bond markets. Let me, however, start with the government issuance. As you are already aware, the federal government issued 28 new bonds, totaling of about 791 billion naira, while states and corporates issued new bonds totaling 184 billion naira. The states that issued, as you know, were Benue State, Niger State, Delta, and Ekiti State. And as many of you followed during the year, these transactions helped these state governments with addressing infrastructure and other economic development issues. You'll also recollect that in December of last year, the new gold exchange traded fund, valued at almost 1 billion naira, was listed on the exchange. These gains notwithstanding, we still have only about 230,000 Nigerians that invest in collective investment schemes. I have already indicated that we launched the revised Code of Corporate Governance in 2011. This year will be our first year to see the extent of compliance with this new Code of Corporate Governance. But we're delighted that most companies have written to us to confirm that they will be in compliance with the Code of Corporate Governance. We do believe it is very critical as we continue to showcase that we are serious as Nigerians about making the Nigerian capital markets the preferred investment destination. In September of last year, the board of the S.E.C. set up an industry-wide committee to examine the experience of other countries, the issues around the demutualization of an exchange, and to make appropriate recommendations to us as to what framework we should develop and guidelines to support the exchange as and when it deems it appropriate to demutualize. That report has been completed and will be submitted to the S.E.C. very soon. I also want to highlight that we consider this an extremely important issue, and fortunately, with the support of the International Finance Corporation, we're able to have the former CEO of the Toronto Stock Exchange work with us, work with the technical committee, work with other stakeholders on outlining what the issues are with respect to demutualization. And he will be speaking at a workshop that we'll be organizing next month on this issue, as well as the key members of this technical committee that we had set up. Given these few highlights that I've given about some of the key issues that we focused on in 2011, let me now share a few thoughts about some of the things that we want to focus on in 2012. One area that is of importance is the Abuja Securities and Commodity Exchange. The coordinating minister of the economy, our supervising minister, as well as the central bank governor, the minister of agriculture, the Abuja Securities and Commodities Exchange and itself and ourselves, during last year, had a touch-based discussion on some of the issues that will enable us transform the Abuja Securities and Commodities Exchange. We had the benefit of an international expert who did an assessment, and I believe that this year, certainly, we will make progress on making sure that the Abuja Securities and Exchange Commission is positioned to support the transformation agenda in agriculture and in other sectors of the economy. Today we have about, give or take, 5 million retail investors. That is less than 3% for a population of 167 million people. We've also seen, both in 2010 and in 2011, a very significant participation of foreign investors in our markets. We believe that if they're wearing glasses and are seeing the investment opportunities, that we Nigerians should wear the same glasses and see the investment opportunities that they see, particularly given that our equities today are considered on a price-earnings ratio the most undervalued when you compare us to other countries in sub-Saharan Africa. Agriculture makes up 40% of Nigeria's GDP. In terms of listing, it is a mere 0.34% of the market capitalization. We connect very closely to the transformation agenda of the federal government on agriculture, which the Minister of Agriculture has been leading in terms of aspirations. Even as recently as yesterday, he was outlining in the news media that we spend, I think, more than $2 billion on importing rice. Yet, every corner of Nigeria can actually produce rice. He's already taking steps. I understand that one of the largest rice millers in Kenya has signed an MOU with us, such that in Taraba State, we would expect to produce about 300,000 metric tons of rice, which is about 15% of our requirements. This shows you what it is we can essentially do in that sector. And you can take cocoa, you can take many other areas, you can take cassava, where we're the largest producer. If we implement his strategy of ensuring that there is value added in Nigeria, in this sector, what we expect to see is that a number of those companies will come to the market looking for money, or will come to the market either because they've had private equity or venture capital firms invest in them to exit. And therefore, we can start to see the beginnings of truly democratizing success in critical sectors. You have followed, and I have followed, the debates around encouraging the telecom companies and the oil and gas companies to list. We believe that it makes good business sense. We believe that given what we've done over the last 2 years, ourselves and the stock exchange, in transforming the markets, that there is no reason why any of these companies will not see the Nigerian capital market as an important source of funding